So we'll just go ahead and get started. Thank you for sticking around. This is just the continuation of a wonderful day that we had yesterday and a great morning. My name is Lena, and I'm with CGF Bourse, which is an investment advisory firm based in Senegal. And it's a pleasure to be here to moderate this great panel. I think we spent the last day and a half talking about investment opportunities in Africa. We've talked about it from a macro level. We've talked about it from a political environment standpoint, from many different angles. And this panel is really to give you all an opportunity to look at specific companies and institutions that are on the ground and that present investment opportunities to all of you and to investors around the world. I think this was quite an informative panel. I hope you agree with me, because we've had cases of specific companies in different sectors, but also institutions that accompany investors in the process of identifying opportunities and putting their capital to work. So with that, I thank you all again, but let's open it up for questions. We have microphones around? Yes. Precious? All right. We have in the front over here. Thank you. You can just tell us your name and affiliation. And
Joanna again from Ashmore. My question is for Mr. Kewell. You mentioned quite a bit of success in raising capital for various institutions, and one of the points you made was your ability to give them some comfort regarding the fear of devaluation in the currency. Could you share with us what you were able to share with your clients regarding that specific point?
Okay, thank you very much. The reality is that exchange rate devaluation is something that's not just an issue in Africa, it's across emerging markets. We envisage that, in promoting and supporting investments, we tend to focus on the sort of investment that is longer term rather than a portfolio investment. I mean, there is nothing wrong with portfolio investment, if I may say so, but in essence, it's a play on the market. But what we focus on is real investment, in the sense that you're looking at investors who are ready to participate in a project and are ready to consider the long-term return on that project, regardless of exchange rate fluctuations. And we've seen such investments whose return are essentially shielded from currency devaluation in a whole host of sectors. I've mentioned oil and gas earlier. I mean, basically it's a commodity play. Oil itself is denominated in dollars worldwide. So while it may be subject to price fluctuations, it's not really a devaluation story. In telecoms, for instance, the sort of returns we've seen in telecoms in Nigeria is enough to defray any devaluation. And it was interesting. We did some research work over the last 10 years up to end of last year, and look at the Nigerian currency has been sort of depreciating over that period. But we look at what happens to an investment, just an investment in Nigerian government bond over that period. And it's good that you are from Ashmore. You have a lot of experience in this area. And it turned out that if you net off the effect of currency depreciation, all right, you are still ahead by more than 8%. That is better than the return you'll have earned on whether it's US Treasury bills or bonds or whatever over the course of that 10-year period. I mean, that's the reality. And that's investing in essentially a risk-free instrument. So if you're investing in a project that generates a lot more return than that, I mean, I don't need to tell you what the opportunities are there. So my point is that if you work with the right partners, you select the right project, and you back the right sponsors. Africa is a gold mine. I mean, there are very, very good opportunities there that are just as good in terms of return, regardless of what's happening in the currency.
Excellent, thank you. More questions? Yes, sir.
I have been struck by the interest in international investors, among international investors in investing in Africa, but I don't see much product with respect to retail interest in the OECD countries. In the US, for example, there are some funds, but there isn't really a range of opportunities in both fixed income and in retail. So I wonder if you could talk to that issue, whether you're looking at that. Certainly managing African money from Africa, 60 to 600 billion, is a huge opportunity, and you may not really want to look at other sources of funds to manage, but it seems to me investing in local currency in Africa could be exciting for some. Some institutions are doing that, but there isn't much retail product directed through, let's say, some major US and other outfits like Schwab or Van Kampen Merit or whoever. So what are you thinking about this, or are you just so much low-hanging fruit that it doesn't matter?
Sure, thank you. Wants to take this?
Lena, do you want me to take it? Okay. Okay, thank you for your question, which is a very good one. Indeed, what we don't have in Africa today is a range of retail products, as we can see in Asia, for example, where you have a range of retail products that can provide you access to international or to emerging markets. If you look also in North America, indeed, you have also that massive pool of retail products that you can buy if you want to have exposure to emerging markets. The reality is it is a process. It always takes, number one, the institutionals before moving to the retails when looking to buy, when looking to build the fund management industry. We have seen the same process in Latin America. We have seen the same process in Southeast Asia. North America, and especially US, is significantly lagging in terms of exposure to Africa. If you consider the pool of assets available and the exposure of that pool to Africa, if you compared US to Middle East, Europe, and Asia, US is the last one in relative terms. So it is for us as well to engage more and more the institutional investors that are going to lead the way and show the retail side that you need to consider increasing your exposure to Africa. The second point to raise as well to respond to your question is, in Africa, there is also a need from the portfolio managers to develop a real suite of retail products, and I'm talking about from an asset management perspective here. You have some mutual funds across the countries, and especially in Nigeria, Cote d'Ivoire, and Ghana. For example, EcoBank, we have a family of 10 mutual funds that we have developed in those countries and that are dedicated only to retail people, and that we are selling through the branch network that we have. We have 1,250 branch network across Africa, so the point and the target is to make sure that we can deliver those retail products to those 10 million customers within the 1,250 branches that we have in Africa. So that's the first point to your question, which is the retail side. There was a second point that you have raised, which is also something that is very close to my heart, which is the issue about investing in local currency assets. Because it always puzzles me when you talk to investors, they're going to tell you that they are ready to invest in Africa, but they only want to consider Eurobonds. Come on, let's be serious. If you look at Eurobonds, the same credit risk that you are taking in investing in Eurobonds is the same that you are taking when investing in local currency bonds. It's the same credit risk. The only thing that you add is the foreign currency risk. That, by the way, you can hedge as well. So it's not a matter of credit risk when you're investing in local currency. So one thing that we are trying to do from a co-bank perspective is to educate investors as well on the opportunity that you can see in the fixed income market, and especially in the local currency bonds market. So we have set up in 2012 what we call the Middle Africa Bond Index, which is going to provide them a benchmark and showing them how the bonds, local currency bonds in Africa are performing. And I can tell you that consistently since 2011, the Middle Africa Bond Index that we have set up has been beaten significantly, the JP Morgan Emerging Market Bond Index, by more than 400 basis points every single year. And I'm talking about local currency versus local currency. So it is an opportunity that investors have to grab, and our job now is to indeed set up a vehicle that is going to be replicating that index, because I can understand from the investor's perspective, it is also very difficult to say that I want to invest into those local currency, but I want to do it with a disciplined approach. So that's why we believe that having a passive strategy may be a better product that can help them to say that I just want to have an exposure and I'm going to see how the benchmark is going to progress without putting my bets on the quality of the portfolio manager. I just want to have that exposure with it on that product. That would make sense. So that's one of the things that we're going to be launching in the coming months. A family of bond index funds that can be appealing to the institutional investors. Thank you.
Thank you very much. So these would be exchange-traded funds that will be available, mutual funds that will be available for the public, right?
Yes, it is. It's not going to be an ETF, but it's going to be a fund that is going to be domiciled indeed in a jurisdiction that, once again, investors like, because that's another issue as well that we know. People say that I want to play Africa, but I want to make sure that the vehicle is not registered in Africa. Why, we don't know.
To give them comfort, maybe. Yes, Mr.
Just to add a few things. Sure. It's interesting, when we had a discussion or a panel yesterday or today discussing diaspora funds and diaspora bonds, the challenge with retail investment and retail investors is that every jurisdiction tends to protect them, primarily because they are not regarded as sophisticated investors. All right, and in that sense, I mean, I cannot agree more with my colleague that institutions have to lead the way, but more importantly, it's really very difficult to step out of your country or your territory and market retail products in a different jurisdiction. I mean, you will violate all sorts of laws. We are part of the team working on the diaspora fund for the Nigerian government, and I can assure you we've been on this for close to a year, just trying to navigate our way through the different laws in the different jurisdictions, whether it's Euro, UK, or the US. You know, and it's for very good reasons. I mean, you can imagine the sort of fluctuation we've seen in the currency market. It's tough for institutions to cope with it. You know, retail investors will be at a loss. I mean, they just won't. Half of them won't know what to do. You know, so I think there are very good reasons why retail investors, you need to be careful in how you bring them into markets that are emerging markets and ensure that their expectations in terms of return and protection of their capital is met.
Right. Excellent. Thank you. More questions? We have maybe time for a couple more? One more. All right. Yes, ma'am.
Hi, thank you very much. It has been very interesting to learn all about the African countries and companies. I'm here on behalf of the NEPAD agency. I'm a special advisor to Mr. Namayaki, but I have also another hat. I'm senior consultant for African investment for Sumitomo Chemical Company in Japan. So with my hat, the second hat, I have two questions. One is that whenever I try to convince the Japanese companies to invest in Africa, they always say that Africa is far away. And some of them think that Brazil is closer than Africa, which is wrong. I would like to know from the African point of view, do you feel Japan far away? If so, what is it? The secondly, how do you see the Japanese companies in Africa? What do you think they should be doing? And also, if there is somebody who could give me 3 selling points that I should use to convince Japanese companies to come to Africa. So this is one set of questions.
That's a lot of questions.
Okay. Now, I'm giving you a lot of food for thought. Right. The second question is often African compare Japan and China. And I always say that the Chinese are coming so aggressively to Africa. You people, Japan, you are losing the boat, and you really should hurry up. And I'm still having difficulties. Now, I would like to hear from African companies, how do you see the Chinese investors coming to your continent? Do you feel comfortable about it? Do you feel a threat about it? How do you see the difference of Chinese investors and Japanese? These are the 2 set of questions. Sorry, too many questions.
Thank you very much. All right. So who wants to pick which of the questions? Maybe from a standpoint of a African-based company. Do you have any comments on what she said?
Well,
okay. I think I'll try. I'll give it a try. Yeah, what I think is important really for Japanese companies is to really take the opportunity. In Africa, there's so much opportunity, and Chinese are coming, like you rightly say. But I think what they're doing, obviously, is also they're using the China Exim Bank to give loans. I mean, concessional loans to companies or governments in Africa, which is quite tempting. So governments take those loans, and then of course the contractors or the companies will come and they do the work, the railways and the infrastructure projects. There's no reason why Japan should not be able to do that, because Japan also has, I think they also have Nexim, which I think also covers the political risk aspect of it, while China will use the Sinosure to cover the political risk. And we're also there anyway, to be able to share that risk with them. So I think you can encourage them to come, and I think the equivalent of the Nexim, of the Exim Bank should be able to provide those loans to those governments. I think the governments are quite willing to take that, because I know the competition, a lot of competition with the US Exim, because China comes without any conditions. So I don't know whether Japan will come with conditions.
And I think maybe I will add something very quickly. I mean, that's also what we tell many US investors who are also interested, but they're not sure how to start, where to begin. And what we tell them is, while you're sitting on the sidelines waiting for things to be perfect, others are going in, and that's your loss. So people aren't waiting, whether they're Chinese, whether they're investors from Brazil, from Spain, right? So the more you're sitting on the sidelines waiting, the more you're losing opportunity to actually get returns. So I don't know if anyone had any final...
I think fundamentally there's even a need to understand what I will call where each of the developed or developing economy lies in their cycle of development. The Japanese economy has essentially moved practically away from commodities and basically base industries, to a much higher level of production, sophisticated technologies. And they've moved a lot of the base industries into China and Southeast Asia, And what we see in Africa is essentially the Chinese moving a lot of those same base activities closer to its market in Africa. So they will set up, they will do infrastructure in Africa. They will set up companies that do, they will set up significant operations in mining. Those are a lot of what we see in Africa. And for me, it is very much welcome. I really don't care where the investment is coming from or who's bringing it. It's all welcomed. In Nigeria, for instance, we actually do see the Japanese, particularly in heavy industries, maybe in the oil and gas sector, either working with indigenous or IOCs. We see them in some, in the technology or the automotive industries, all right? But China, just simply because of its size, the size of the economy, its impact globally, has a lot more impact in Africa. And if I'm to offer something to the Japanese companies, all right, it will be, well, if you're looking for market, Africa is a significant market, you know. If you're looking for growth, all right, African countries and African economies are growing faster than almost anywhere else in the world. I mean, so if what is important to your company is growth, is future opportunities, then you need to consider Africa, and distance should not be a barrier.
Right. Thank you. Mr. Skuma, you want to add?
I'll just give a
final
quick
comment?
response. I think there's two areas from a producer that we see opportunities for your country. Firstly, it's obviously in the equity side. We're a gold producer, so if you like the gold play but you do not like the risk with normal underground operating mines, a company like ourselves will be a good opportunity for yourselves, which we don't have the risk, but we're in the gold space. And I think on a second level, it is specifically technology. We've just implemented a new process called the flotation of fine grind circuit, where the beads that's used in the mills grind the material down to 90% passing 22 microns. Now that is essentially face powder, stuff you ladies put on your face, same size, and that is gold ore. Now those beads come from, some of them come from Japan and China in particular. So technology in South Africa, and specifically in our company, is playing a massive role. So there might be two opportunities for yourself.
Wonderful. Well, thank you very much. Please join me in thanking our panel. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.